Real estate or stocks, which one builds wealth faster? If you're just starting your investing journey, you've probably asked yourself this. In this video, we'll break down the pros, cons, risks, returns, and time it takes to build wealth in both real estate and stocks, so you can make the smartest decision for your future. Quick definitions. Let's start with what they are. Stocks are shares of ownership in a company. When you buy stock, you're buying a piece of a business, and your returns come from the company's growth and profits. Real estate means investing in physical property, like a rental home or apartment building, and you earn from rental income and property value appreciation. Returns, which grows faster. Let's talk numbers. Historically, stocks have returned about 7 to 10% annually, adjusted for inflation. That includes dividends and price growth. Real estate typically returns 6 to 8% annually, but this depends a lot on location, leverage, and management. But here's the twist. Real estate investors often use leverage, aka mortgages, which can amplify returns. For example, a 20% down payment on a $300,000 home gives you control of a whole property. If that home goes up 10%, that's a 50% return on your cash. Stocks can't be leveraged the same way unless you use margin, which is way riskier for beginners. Cash flow, who pays you more monthly? Real estate offers monthly rental income. This can become a reliable cash flow stream if managed right. With stocks, you get dividends, but they're usually lower. For example, the average dividend yield on the S&P 500 is around 1.52%. So if you want steady monthly income, real estate usually wins. But, and it's a big but, being a landlord is not always passive. Which brings us to time commitment and passive income. Real estate can be semi-passive, but it often involves managing tenants, fixing stuff, or dealing with property managers. Stocks are truly passive. Once you invest, that's it. You can automate it, forget about it, and let it grow. If you want freedom and minimal effort, stocks are way more passive. But if you don't mind a little hustle, real estate gives you more control and more income earlier on. Risk and volatility. Both have risks, just different ones. Stocks can be very volatile. Prices can swing fast, and emotionally, that's tough for beginners. Real estate feels more stable, but comes with risks like bad tenants, vacancies, property damage, or market crashes. You can diversify stocks easily. With real estate, diversification takes more capital. Upfront costs and accessibility. Here's a major factor. How much do you need to start? With stocks, you can start with $10. You can even buy fractional shares. With real estate, even if you're doing FHA loans, you're looking at thousands up front. Real estate has a higher barrier to entry. It's slower to get in, but potentially faster to build wealth if done right and leveraged well. Who wins, real estate or stocks? So which one builds wealth faster? If you leverage real estate correctly and manage it well, you can grow wealth faster through appreciation plus cash flow plus tax advantages. But for hands-off investors or people just starting out with small amounts, stocks grow steadily and are faster to scale over time, especially if you stay consistent. Here's the truth. You don't have to choose one. The wealthiest people often own both. If you're just starting out, begin with stocks to build capital. Then use that capital to get into real estate. Or, if you're hands-on and ready to hustle, jump into real estate and grow aggressively. Let me know in the comments, are you team real estate or team stocks? Don't forget to like, subscribe, and hit the bell for more no-fluff investing tips.